Hello and welcome to another update video about FET. FETCH.AI did break out. Yesterday it was here. We had a break above this green line. The price turned around in the larger support region here several times, formed higher lows, consequently, but also lower highs. So I mentioned to you already a few days ago that we had now reached a point where a breakout needs to happen. In one direction, because we were squeezed into the apex of this triangle, and I provided you with the support region. The price used that to jump out of the range, out of the triangle, and actually form a higher high. Okay, and now we need to see if the bulls can form a higher low as well, and then we can carry on our journey towards that 360 milestone target, but overall into the $5 range. That would be ideal as per previous updates. Yesterday I mentioned to you that this swing low needs to hold the 20th of May low at around $2.15. That's really the key level against which we can still focus on higher in the yellow count. Yellow count assumes that the fourth wave already bottomed here on the 13th of April, and we are now working on an ending diagonal, probably into the $5 region. That would be ideal. However, it obviously is only a diagonal, so it's not very clear in terms of probabilities because the subwave structures look corrective, but that's fine as long as we know the relevant key levels. However, now with the latest push higher and the current pullback, I can adjust the micro support. Obviously, micro support, when that breaks, that's not necessarily bearish. It just indicates that the market might deviate on the micro level from the set structure, and it might then follow the alternative. That's the beauty of Elliott wave. It always gives us a plan B. Plan B would be the white count, which would send us down back into the lower support region, possibly to test the $1.57 level next. However, in the very short term, seems like the price could actually follow the yellow count. The thing is, if we're really in this ending diagonal here, then this is a wave 1, this is a wave 2, which bottomed on the 1st of May around 185 here. And then the third wave is an ABC. And the C wave would be unfolding now. And in the C wave, however, the problem is this pullback doesn't really fit into an impulse. Ideally, we wanted to see the third wave extend to 284 or so. Didn't. So the C wave can't be an impulse. So the C wave would have to be an ending diagonal as well, which is then where it gets very, very messy. At least I can identify another possible 5-wave move up. So I'm giving you an additional support zone. So I'm basically just adjusting the key levels. Obviously, this is not invalidation. The invalidation point for the yellow count is still the $2.15 level. But now a break below 226 will be a warning that things are deviating, away from the yellow count, probably towards the white count. And then we form the B wave top, which is likely as well. It's just that as long as we're holding support, also due to the breakout, I'm focusing on the yellow count because you have to have some kind of a preference, right? But I mainly look at the levels. Okay, that's much better than having a preference or not, because we don't want to be biased. It's all about the objective analysis and which levels do really matter. Yeah, so it means really in terms of micro, the only way to really look at this from a bullish point of view is to say that this here is wave A of wave 3. We're now doing a B wave pullback, and the wave C could take us into the $3 region then. Condition is that the $2.26 level is holding in any B wave pullback, because below that level, it's very likely that we're going to test and then also break below the 20th of May low, and then it is a 3-wave top, and the mess, carries on. It could then again morph into something different. That's always what happens with these corrective diagonal structures, but at least we've got clear parameters to watch, and obviously a break above the what I have now labeled as B wave top would indicate that the third wave is continuing. Looking really at the micro, I can add that here. The idea would be A, B, C in the yellow count. Like that, yeah. That's a bit of a hopium count, but it's best we've got here on this chart, at least on the micro level. I mean, bigger picture is much clearer. But here the $1.27 level really matters. So in a sense, if you're not so interested in the short term, see all of this as noise, and we want to get from the larger support zone to the $5 range. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.